So first is the trust and credibility. Second is service and quality. Third is fee, apex rate, interest rate, limits. And fourth is the customer satisfaction. Now, the people are having huge trust and credibility on a conventional bank. So if somebody was having an account, somebody's father was having an account with Standard Chartered Bank, son usually go and open account with the same bank because the father is having a lot of trust on and credibility of that bank. So trust and credibility is more towards the conventional bank. And reason is so many, like I can give you the separate complete reasons, but you know that these people are focusing too much into the area where they are securing your account. Means there are a lot of threats, whether it is a cyber attack, whether it is a fraud, whether it is a money laundering, or whether it is. So these people are pretty much having a very, very strong system in a passage of last 50 years built into the system that they are giving trust and credibility to the customer. So that is their legacy, in a sense, a good legacy where they are giving a trust, and the less number of frauds, less number of cyber attacks, less number of these anti-money laundering cases, less kind of terrorism funding. So they have a huge, good transaction monitoring system, customer monitoring system, KYC. So I'm not saying that that is not in the digital bank, but the digital bank has to take a time to reach it to that strength or that level which they got in 50 years. And by the way, every year these things are changing. So if you are going into the kind of security kind of thing, cyber security every day is changing. Millions of new viruses coming every week and every month. Second, every regulator is changing their how you have to do the KYC differently, how you have to do the CDD separately, how you have to do strengthen your monitoring. They penalize the banks, like you heard about before, that they have put up a $6 billion in HSBC or Standard Chartered Bank as a penalty on money laundering. So these people, when they are giving a $6 billion to penalty to this US authority, they can give a billions of dollars to put into this system to build into, so that next time they should not end up with the situation where they should get this penalty on money laundering and all. So it's still, because the digital bank is having less ability to invest into these areas. So that is the trust and credibility comes into the customer, how the customer see the digital bank or the corporate bank. Service and quality, the same thing. Customer wants service, customer want quality, where digital bank is doing much better actually to me. Whereas the legacy system is a lot of issues. And the issues, why? Because somebody is having a 3,000 branches or 2,000 branches or 10,000 branches. Every person is not dealing the customer with the same way. So although the process is same, training is same, everything is same, but each customer agent behavior is different. Teller's behavior is different. Some speak, some smile, some deal very well with the customer, some don't. So service and quality comes to when branch banking, we have challenges. And I know that this is a huge challenge. And that's why most of the banks are doing this called channel migration. They want to move the lot of transaction from branches to the channel, which is more of a mobile banking, ATM, CDM, cash deposit machines. So this is something that they are doing it. So my view is the service and quality digital bank is slightly ahead because they are having a one app. Some are not even having internet banking. They are having only the app. and they are giving a service with the one application, and there is a limited number of products. So when you are having a limited number of products compared to 900 types of accounts and so many product types and so many variation in a product and so many type of payment, definitely that is more complex than actually digital bank. Digital bank is very lean, thin on a products. So one thing is very important. I want to tell it to the people who are designing the digital bank's products. Digital bank products have to be designed very differently than how the bank designs. So conventional bank designed with the mindset of, first they look into the regulatory requirement, because any product has to go into, there is a regulatory requirement. Then they look into that, what is our system? So whether the core banking is supporting it or not, how much effort has to be made in a system for any new product. Third is going into that, looks into our processes and the people at the branches. So a lot of training, a lot of other things are there. The last thing goes into the what customer feels. So it's a very strange thing in a sense. I always call it, we go inside out, not outside in. And outside in means that we have to take a design thinking methodology when we are going to the digital bank to come up with the product. Design thinking is all about going first to the customer. So you have to go to the customer and ask them what is their problem area and try to resolve that problem by issuing a new product. It's not that you want to have a product because somebody other digital bank is having it, whether the people are using it or not using it. So you have to understand that when you are going into the any design of the product, you have to understand that it should be designed on the basis of design thinking basis. Now coming into the fee, FX rate, interest rate and limits. So retail bank in conventional bank is having a lot of cost. So the cost mean that they are having a branch network, they are having a lot of people doing work in there. So it varies from a 25% cost of operation to the some banks are having a 50% plus cost of operation in a branch network. So they are having a high interest rate and high fee income, because their all profitability comes from the interest income, fee income, and the FX income. So this is something that a conventional bank do, same as for the digital bank. Digital bank is not making from any other area. They are making from a fee income, from a FX, from an interest income, from a limit. So that's what they are getting some money on a preset monthly charges, which is usually not the case of accounts in the bank. Yeah, credit card might be some bank are charging monthly fee or annual fee, but I don't see that if you are having an account in the bank, you should be paying to the bank. Even the people comes and say that I want to have a 25 fixed deposit account, or I want to have a 10 saving account. They can go and they can be able to create it without any paying money to the bank. Whereas digital bank is charging on the basis, because they are putting a more sort of things on their cloud system, on their system. So in that case, they want to get this money from the customer. And the last thing is the customer satisfaction. All above three at the end, customers with the customer satisfaction. If the customer is not happy with the conventional bank, he has to migrate into the digital bank. And that's what is the whole phenomenon of virtual bank and a digital bank, which they are coming up and saying, as conventional bank has failed in the last 50 years to give the right satisfaction to the customer, we are here to give the best customer satisfaction to the customer. And I want to show it to you that in certain cases, they have done as well. So this is something that very important, that as more you will move on into the customer satisfaction, and there are multiple ways of judging the customer satisfaction. Usually the conventional bank is goes for the net promoter score, NPS. And NPS, I'm dealing with the last 15 years in where we were on NPS in this area and where we were on a NPS last year, and whether we have gone up and whether we have gone down, what other banks are doing it. So NPS for such banks, which is conventional bank, is very, very important. Retail banking is always looking into the NPS, whereas in a digital bank, a lot of people are doing surveys as well. So I want to show it to you, one survey. This is a survey of, not a large survey, it's a 3,000 customer survey, and they have gone to the people who are having accounts with either digital bank or also to the conventional bank. So very strange, the best bank came into this list. 94% customer said overall that we recommend and we are satisfied with the bank, which is Sterling Bank. And Sterling Bank is not a conventional bank, it is a digital bank. The second UK bank is National Void. National Void is a 90%, which is a conventional bank. Again, the third bank is a Revolut. Revolut is again a digital bank, and it is an 89%. Like customer satisfaction level is 89. This is a very generalized view has been asked. Are you satisfied and would recommend to someone this bank? How you are saying which one you can choose it. So basically the people came up with the my first choice is this, my second choice is this, my third choice is this. And these people selected out of top 6 banks, 3 are digital bank. So Monzo is on 5th bank actually. And 5th bank is Monzo, which is 86%. And then Santander Bank is coming, NatWest is coming, Barclays is coming, Bank of Scotland is coming, and HSBC. So HSBC is 80%, and you can see Sterling Bank is 96%, 94%. So this gap is there. Like when you see the gap, there is a gap. They are moving on, and they are getting a satisfied customer on a digital bank. And that is the area where I'm saying how digital bank is different and how digital bank do differently in the next 5 to 10 years time. Next, I talked about NPS to you. I'm not going into this very busy slide, very busy thing. I mean, you can say one side of the question, which is telling you that where the banks are, who is what percentage. So they ask, NPS is done by the various third-party companies. And they ask on a particular account, particular card, on a particular thing. So it's not, it's a product by product. So this one is called main current account. So you are having your main current account, tell me about this. Or they are saying you are having a credit card, tell me about these questions. And they give you the 6 questions, you have to answer it. Like I can show you that one of the question is that it has fair fee and charges. You can see the lot of reds into it. The reds is a below average. So below average banks are almost 7 banks out of 11 are below average in this area. Means that, which I was saying to you, that digital banks are doing pretty good, although their money is coming from a fee, interest income, and charging to the customer. But people are rating conventional bank very badly on this aspect. Means that conventional bank are charging more. And I told you the reason that they are having a significant number of branches and their cost is much. So you have to see at some stage cost income ratio. What is the cost income ratio of the bank? And you can then understand that where the cost is. Although people are in a profit, that's not an issue in a sense. Issue is all about what is your cost income ratio. And if your cost is high, the bank want to reduce the cost. And That's how this whole thing comes into how you can increase the revenue as well to maintain that cost income ratio. So is the cost income ratio should be done through the reduction in the cost or the revenue in the cost? Of course, both. I mean, any banker will say both are important. So you have to reduce the number of branches, you have to reduce the number of tellers, you have to do the high digital transformation project in the branches, so that you can be able to reduce the number of not only the teller, but you have to increase the productivity of these tellers as well. Now, another area is, if rewards me for being a loyal customer, is the bank is rewarding me as a loyalty or trust I'm having since last 30 years to have an account with them, whatever the number of years. And very surprising, out of 11 areas, 9 areas customers is giving a below average rating. Means the customer are not happy with the bank, that they are giving any value to me that I am loyal. They are thinking about how much this customer is profitable to me, and that's how we treat to the customer. So you saw in many bank branches saying that periodic customer counter. What is a periodic customer counter? Periodic customer is a counter which is having a huge deposit with us, giving the profit to the bank, and our CRM and data warehouse is telling who is the profitable to us, and we make them as a periodic customers. So normal customer has to take another counter, the periodic customer has to take another counter, and private customer not at all have to take the counter. The counter has to go to his house and deliver things into the office or the house. So this is the treatment. Treatment is not happening on the basis of loyalty, that I'm having an account and loyal to the bank since last 20 years, 30 years, or 10 years. No, it is how much I am profitable to the bank. So the bank is thinking from their own perspective. So NPS tells us the bank very well. And in fact, the both businesses like consumer banking business is very much on NPS. This is debated into the management level. This is debated on a customer experience level. This is debated on when we are going on a digital transformation project. We are going on this NPS score when we are going into that, how we have to reduce the cost by doing the right digital transformation and automation in branches, and how we have to migrate some of the activities to the other channel. So NPS is a very heavy. In fact, I can do a separate video on NPS and separate video on a digital transformation on a called channel migration. And channel migration is not happening now, it is happening since last 15 years in a conventional bank, where they are migrating the branch activities to the other channels. So this is something that I'll do the videos later on, but this is a product side. I just told you today that how digital bank is different than the conventional bank. I will cover further my 6 slide which I have showed it to you, and I'm now showing this slide to you just to give you the view that what we are doing it. So next is technology next time. So how digital bank technology is different than the actually and thereafter we'll go for a risk and regulation and regulatory challenges. So there will be number of these videos on how digital bank is different than the conventional bank. If you like this video, please subscribe it and click it to the bell icon, so that all the videos I'm putting into you will get the notification, and you have to support it so that I should be keep doing this videos for you. Thank you very much.